In the next minute, I want to break down a strategy that has allowed me to make consistent profits trading NQ futures for the past year. What you have to do is decide your bias or your draw on liquidity. After that, you wait for a sweep of internal liquidity on the 1 minute, the 5 minute, or the 15 minute. You want price to also trade into a 5 or a 15 minute fair value gap while it's doing that liquidity sweep. Then you're going to look for a 1 minute inversion of a fair value gap, and you're going to target your entry off of that inverse fair value gap to opposing liquidity. Many traders get stopped out before big moves happen because they don't wait for the internal liquidity sweep or the IFEG. Right now I'm going to show you on the charts a real example of taking this exact model. We formed a 5 minute bearish fair value gap with resting liquidity below at this swing low here and this swing low here. We traded back into that 5 minute fair value gap and also swept internal liquidity right here at this swing high. When I zoom all the way into the 1 minute time frame, you can see we formed a 1 minute bullish fair value gap on the liquidity sweep. What you have to do is wait for price to close below that with the body of a 1 minute candle and then retest it like it does right up here, and then you would look for your entry right there. I would keep my stop above the 5 minute fair value gap after I get my entry, and I would target first that internal low, which would have offered over a 1 to 5 risk to reward. If I would have held this trade all the way to external liquidity, you can see here that it would have been almost 800 ticks of profit, offering about a 1 to 8 risk to reward. This strategy could be the only thing you're missing to start catching huge moves in the market.